Hello again. So in this video I'm just going to explain. I have made another video where I show you how to build a correlation matrix using Excel, but what I've done is I've created this Excel template, so all the formulas already included in the spreadsheet. And what this is going to enable you to do is to very quickly look at the correlations amongst lots of different assets. So as you can see, I've just got all the ticker symbols here on the left. So I've got all the major agricultural tickers, and for your information, what I'm using is the ETF tickers. So we've got agricultural markets like corn, etc. We've got currencies, all the major ones. We've got global equities, energy, metals, rates. Now, when you buy the book, which is the Honest Guide to Stock Trading, and that's currently available on Amazon, $9.99. When you buy the book, you'll get a link, so you can have this spreadsheet completely for free. And what you do is, if you just go into add-ins, why download, get history bulk, and then it's pretty simple. It'll this little box comes up. So basically it's self-explanatory. It tells you what to do. So in the tickers range, we just want to copy all the tickers, and again, as I say, all these tickers are already included in the spreadsheet. What you're seeing now is exactly what you'll be able to download. Start date, so let's say we want 100 days of data, but we can look at any different dates, so you can go back in time if you want. So you can do lots of different analysis very quickly, but let's just say that we want to know how the market is correlated at the moment. So let's just go, let's get, say, we're getting about 90 days worth of data. So to put in our dates, frequency, we want daily, but you can change that to monthly or yearly. Output range, just click on the output range, and again, this is already pre-built for you, so just always make sure you click in F1, press enter, and then we're going to download. And what it's going to do, it's going to bring all the price data from Yahoo automatically into the spreadsheet for all of these different ticker symbols and for the dates which we specified. So click on download, and as you can see, the entire spreadsheet now is just populating. So we have all that price history all nicely done. And then at your bottom of your spreadsheet, just click on matrix. And at the moment, as you can see, the matrix is built. So we just want to refresh the matrix to bring in the new price data we've just downloaded. And we can specify the number of days we would like to use as a look back. So let's just say we want to use 20. So type in 20, click OK. And there you have a full correlation matrix. We can have a look. Obviously, we're always going to have the ones right down the diagonal because markets are correlated perfectly to each other. So corn to corn, wheat to wheat, etc., etc., etc. And yeah, just looking at this, we've kind of color coded it. So red is high correlation. We've got orange, which is, you know, the next correlation. So I've done between 0.8 and 1. Between 0.6 and 0.8, we've got the yellows, and then we've got shades of green coming down to the darkest green, which is between 0 and 0.2. So the green is where, you know, we haven't really got correlation. The red is where we've got perfect correlation, and then we've got the areas in between. So you can just have a look at this and see where you can diversify a portfolio, or where you may be building too much risk in a portfolio. So, you know, if you're long some of the metal markets at the moment, so if we just zoom on in, you can see here we've got gold, silver, platinum, palladium, copper. So if we just come down, you can see that very, very highly correlated with one another. So you wouldn't want to be taking full positions in each of those ETFs. You know, you'd want to diversify your risk. At the moment, we can see that you know, agricultural commodities and currencies, for example, are not really correlated at all. So you could definitely find diversification in those asset classes. But what's really great about this pre-built matrix is you can just click refresh matrix again, and we can look at a different look back period. So if we go, let's just say, I don't know, let's say 10 days. Click OK, and you can see it's more reflective of you know, much more recent price movements. Let's just go with 3. You see, so and that's just because the way we use the log returns in the calculations is obviously gonna, the longer look back period we use, the kind of smoother the data will be. So if we go to let's say 90-day look back, click OK, and you can see it's been incredibly sanguine markets really for the last few months. Very little pockets of highly correlated markets, which is a sign, of a healthy equity market. When we have bearish equity markets and it's kind of a risk-off environment, then you're going to see a lot more red populating the matrix. But between 60 and kind of 20 days is what I'll tend to use. But if we just stick with our 20, which is kind of a balance, between a long look back but not too short that we're not really getting very smooth results. 20 is, I think, a decent look back period, depending of course on your trading strategy as well. But there we have it. So that's a totally pre-built correlation matrix. We've got all the markets from different asset classes that you may want. We've even got volatility here on the right hand side. We've got bonds, metals, energies, global equity markets. So we've got African, the BRIC countries, Gulf, Southeast Asia, developing Europe, emerging Europe, and we've got the major American indexes, global currencies. We've got Aussie, Canadian, British, Swiss, Euro, Yen, Real, Rupee, and so on and so forth. So if you'd like access to this spreadsheet, as I say, just go to we've got my blog here, but if we just go to Amazon, and we've got the Honest Guide to Stock Trading, and here it is. It's $9.99. Currently it's a 5-star book, so grab a copy, and if you really want to be kind, you could leave a review, whether it's good or bad. Honest review is always most appreciated. So thanks very much for watching, and take care.